Trade tensions have dominated headlines for more than a year. Since U.S. President Donald Trump took office in January of 2025, Canada's trade environment has become increasingly volatile, raising questions about whether a return to normal is still in sight. The pressure has been significant enough that Prime Minister Mark Carney signed a trade deal with China, a move that would have been difficult to imagine just a year ago. Those pressures have also been reflected in the broader economy, with Canada's 2025 GDP growth coming in at 1.3% below recent post-pandemic levels. Still, not all sectors are struggling. Many Canadian companies are holding up and in some cases thriving. I'm now joined by Brendan Caldwell, Director of Caldwell Securities Limited, to discuss which Canadian companies are performing strongly. Brendan, thank you so much for the time and happy Canada Day.
Happy Canada Day, or for those of you of a certain vintage, Happy Dominion Day.
Now, despite the volatility, some Canadian companies are outperforming expectations. What sectors are emerging as clear winners right now?
Well, what Canada is known for, we just keeps getting stronger and stronger. So the rocks, grease, and the shuffling of paper, that is to say, materials or mining, energy, and financial services have really been the strongest three sectors of any note. Between the three of them, I make up about 70% of the Toronto Stock Exchange Index. So they're just becoming a larger and larger thing. It does make the TMX Index, the Toronto Stock Exchange Index, to be a really one of the more lopsided indices in the world, having such a high concentration in those three sectors. What's interesting, though, is that there's a lot of other companies. They may not make up a big part of the index, but technology, for example, is a tiny fraction of the S&P TSX composite index. But technology stocks have also done really well, along with a lot of what's gone on in the technology in the United States. The funny thing is, the Canadian market has absolutely crushed our American cousins these past 6 months, as sometimes happens when commodity prices, prices of oil and minerals do well. Like during the 1974 oil embargo, Canadian market vastly outperformed. It can be a sign that there's going to be a major change in the markets, but for now, Canada's doing absolutely great.
And TSS banks are among the best examples of Canadian companies that are thriving despite trade tensions. Why is that?
Well, I mean, you think of bank, you think, well, mortgages, and it must be somehow tied to the real estate market, which is not doing very well, the Canadian real estate market, particularly residential real estate. But the Canadian banks have largely pivoted away from that. So, I mean, they've packaged up their mortgages, sent them out. Mortgage brokers, other alternate lenders are coming into the market. So the exposure the Canadian banks have had historically to the real estate market is diminished. So I think normally one would have thought that a bad real estate market would also be bad for banks. So again, I'm sorry, I'm peeling through old history, but that was the case in the late 80s, like very late 80s, early 90s during the Ontario real estate and the BC real estate market pullbacks. Less so now, because much more of the bank's money is now coming from wealth management, trading. Low interest rates are very helpful because it makes the cost of money almost non-existent, and nobody's really expecting much of anything on their deposits. So the banks have basically free money to work with. So between trading and wealth management and having packaged out or reduce their exposure to probably the most vulnerable sector in the Canadian economy, which is residential real estate, the banks have been doing well. I think they're up north of 60% in the last 12 months.
And why have TSX energy stocks done so well in the last 12 months?
Well, I think we have our own government finally doing the right thing after exhausting all the other possibilities has been one part. And the President of the United States doing whatever he's doing in the Middle East has been the other part. So I think focusing on what Canadians can control is just working together as a country. Our whole nation was put together with the idea that if we do not hang together, we shall all surely hang separately. so that the four founding provinces saw the colossus that the United States was becoming and realized if they didn't want to get absorbed, they would need to unify their interests. And it's on that basis that we began, but I think we've forgotten a great deal of that. So to the extent that we've been reducing interprovincial trade barriers, getting pipelines across provincial boundaries, horror of horrors, so that our energy, which is for the next while, 10 years, a generation, next little while, is still going to be a significant source of wealth if we have the will to actually capitalize on it, to get that energy out to blue water, get it out to the oceans, those sort of things where we're working together as a country, that over which we have control over, and that's been very helpful to Canadian energy stocks. The part over which we have no control because we have no real global influence is what happens militarily, and the blockade of the Strait of Hormuz, which allows for the egress, the exit of not just Iranian oil, but all the Gulf state oil. That's driven energy prices to the moon. So to the extent that Canadian energy is nowhere near the Gulf of Hormuz, there's been huge demand for Canadian oil and gas. Gas would be a critical thing. If we could get more gas out to the markets that really need it. I know it's not a perfect solution to the global warming concerns that folks have, but it's still better than energy taken from coal or pretty much any other fossil fuel source. So to the extent we can get natural gas to Europe, to Asia, I think it's both good for our economy and relatively much less bad for the environment than the solutions that those areas of the world are relying on now.
Now, I want to talk a little bit more about the Canada-U.S. relation because it's a little rocky. So to what extent has uncertainty around U.S. trade policy under President Donald Trump reshaped the Canadian market strategy?
Well, I think businesses have realized we're never going to be free of the Americans, nor do I think we want to be. Even in their present bellicose mood, the Americans are still better superpowers to live next to than virtually any other superpower you can name for the history of humanity. Superpowers tend to get ornery from time to time, and they tend to act up from time to time. The Americans have been, hopefully, I'm not saying this like they said of Mount St. Helens, but they've been relatively calm up until this point. So we're never going to be free of the Americans. I think putting the best spin on it is probably too good a spin. When Trump said 51st state, I think what he was really potentially what he was really getting at was closer working arrangement with Canada. And, we've called ourselves that for generations because we have been so closely integrated economically. It's the world's largest trading relationship that's existed since forever. But given the tumultuousness of the present times, I think Canadian businesses, not just energy, not just minerals, but all Canadian businesses are looking to find external sources of revenue. But again, I think the solution is not in the stars, but in ourselves, to borrow from Cassius. We need to deploy the capital Canadians have back into Canada, particularly in the technology space. It is such a small part of our market and such a small area in terms of private equity. And that's where our real value is. It's not in the lumber, it's not in the rocks, it's not in the oil, it's in our brains. And we have some wonderful brains. Waterloo, one of the greatest universities in the world for creating engineers. All of our universities really in Ontario, within 100 miles of where I'm sitting right now. You've got some of the best minds. I mean, artificial intelligence was developed like 6 blocks up the street at the University of Toronto in its present incarnation. We need as a country to reinvest in that even more than in natural resources. The best natural resources we have is our own brains.
Well, as I mentioned earlier this year, we saw Canada move to sign a trade deal with China. How significant is that shift and what does it signal to markets?
Well, I think it's signaling to the U.S. a couple of things. I mean, the U.S. is doing some big saber rattling. Part of the deal was we take in some tens of thousands of Chinese EVs, electric vehicles, which the Americans are not too happy about. We do that on a minimal tariff basis in exchange for China, taking tariffs off our canola and a lot of our other agricultural and mineral products. So, yeah, we need China as a market, particularly for a lot of the natural resources we produce. I think it's signaling to the markets we are prepared to do something. So I think it's more of a ploy is too strong a word, more of a marketing trade negotiation with the Americans to say, hey, we've got alternatives here, than anything too significant. Of course, unless of course you make canola. So I think there's a few things going on in that direction that as Canada looks to do other deals. I don't know how to say this well though, but when it comes to intellectual property, China hasn't been the best. So when I talk about Canadians investing in ourselves, I think it's a whole lot better than having the People's Republic of China invest in Canada when it comes to intellectual property.
Well, Brennan, again, thank you so much for the time and happy Canada Day.
Thank you, Theresa. Happy Canada, happy Dominion Day.